Hello and welcome to another edition of our ETF Insights series, where we chat with innovative leaders from the ETF and digital assets ecosystem. Today, I'm really delighted to be joined by Simone Rosti, who is head of Italy and Southern Europe for Vanguard. It's great to see you. So, Simone, why don't we start with you telling us about Vanguard, which I'm sure everyone who's watching is very familiar with your firm, but if you could tell us about Vanguard and what you do there.
Thanks, Andrea, and hi, everyone. It's a pleasure to be here. Vanguard is actually the second largest asset manager globally, and it is a very peculiar asset manager because we were born in 1975 as a mission-based company rather than a profit-based company. So the structure of Vanguard is quite unique. It's a sort of cooperative mutual funds owned, and we basically leverage this structure in order to reduce the cost of our funds for investors. In terms of assets, we manage roughly 7.5 trillion of assets. 2 trillion are invested in ETFs and the rest in mutual funds. And it is less known, but actually Vanguard is one of the largest active managers as well, because we have roughly 1.6 trillion of assets managing in active funds.
In terms of the lineup of Vanguard ETF products, which of those are Italian investors most drawn to? And in terms of that breakdown of investors, is it more institutional? Is it wealth management, retail? Can you just give us a little color on that?
In Italy, there are a couple of areas which are somehow slightly different compared to the rest of Europe. The Italian market is usually considered the third, fourth largest market across Europe in terms of ETFs assets. We have in the region of 120 billion euro deposited in Monte Titoli, in the local stock exchange, Borsa Italiana. And 40% of them, almost 40% of the assets are in fixed income. Fixed income is traditionally an asset class which is the strongest asset class in terms of investment for the Italian investors and Italian wholesale and institutional clients. And in ETFs, there is quite a high proportion, 40% versus we compare to the rest of Europe, which is roughly 23%. So this is the first element to consider. And when it comes to sustainable ETFs as well, the Italian market is one of the most advanced. Roughly 20% of the assets are in sustainable ETFs, ESG ETFs, versus 17% across Europe. So these are two elements which define some of the features in the Italian market. There is strong attraction from what we see from our perspective, from a Vanguard fund offering towards our core building blocks. More and more Vanguard is perceived as one of the best partners for our investors in order to provide the core building blocks for the portfolios, diversified, very low cost, and with a very good representation of the market with the indexes we track. But we've also seen recently, over the past 18 months or so, a strong attraction toward our multi-asset ETFs. Basically, these are ETFs called Life Strategy Range, and is a nice way to invest with 4 different profile into a very diversified multi-asset portfolio. This has been quite the news in the Italian market and European market. It's still getting more and more traction. This is more for IFAs and retail clients as well. When we look at the structure of the ETFs market in terms of buyers, we still see a strong majority of intermediaries and institutional clients buying ETFs. So we see institutional clients, those at least who are not set up to run mandates, really buying ETFs to make sure they can get exposure to different asset classes in a very efficient way. And this has been growing a lot over the past few years. And wholesale and intermediary clients, have been the main engine behind the growth of the ETF market in Italy. It started when I started ETFs in 2007, it really started as using ETFs for tactical call, very residual allocation, very tactical exposure. And the more the market matured, the more investors realized that the main benefit of ETFs are using them to build very diversified, long-term, low-cost portfolios. And that's the case currently in terms of usage from an Italian standpoint perspective.
That's great. And so in terms of, so now you mentioned the institutional client base and wholesale, but Europe, we know that the retail market just abroad, across all the countries is fairly low, at least compared to other markets per se. So speaking with the retail market, from our understanding, traditionally in Italy, retail investors will go into their bank if they're looking for financial advice. And when they're speaking with a financial advisor, those financial advisors are typically pushing something other than an ETF. So, Vanguard obviously has a lot of influence in the market. Do you think that this is something that you and your team can help kind of bring down those hurdles or change? I mean, I know it's hard to change cultures, but is there something that can be done to kind of help change that environment? I mean,
yes, definitely. I think there are different dynamics in continental Europe and therefore in Italy versus the UK, where there has been the retail distribution review, which really banned retrocession and open up to a more sustainable kind of setup for distribution. Same in the US. In the US, there are they are living together fee-based advisory and still some retrocession-driven kind of distribution dynamics. In continental Europe, taking aside the Netherlands, which are closer to the UK in terms of regulation, there is still a majority of distributors and intermediaries which are leveraging kickbacks and retrocession in order to do their job. And as Vanguard, we have a mission and a mandate, which is to make sure that the final investor is treated fairly. And therefore, yes, we are raising our voice in the market, public opinion, through the Fund Management Association, regulators, to make sure that the conflict of interest will be somehow, surpassed. We're working both at the public level as well as with intermediaries and partners in order to overcome these issues. And we see quite a strong interest recently by some of the more like-minded intermediaries in working with us to either offer lower cost offers or pushing forward fee-based advisory. There is a small but growing IFAs fee-based community. It's growing, but most importantly, we see the banks and financial advisors networks, the strongest intermediaries, the strongest distributors in Italy, looking more and more at how they can reshape their advisory offering also fee-based advisory. Maybe initially it's fee on top, so this is still favoring retrocession and traditional funds. But the more they look into it, the more they see an opportunity specifically for high net worth individuals to move towards fee-based advisory. And this, jointly with the fact that DFM, discretionary fund management, discretionary portfolio management, are using more and more ETFs, are probably the necessary intermediary steps in order to get to a more open market and a place where ETFs will be more and more into retail clients' portfolios as well as wholesale institutional clients' portfolios.
Yeah, no, and I think it's great to hear that you're working with other intermediaries as well, because it's certainly a team effort. You can't do it alone, so that's great. And hopefully at some point we'll see more retail accepting of ETFs across the board in Italy and other markets as well in Europe. But Simone, this is really interesting, and thank you so much for participating in the video. And for those of you who are watching, if you'd like to watch this video again or see some of our other videos, you can go to blackwatersearch.com, and thank you for watching.